Hello, everybody. Welcome back to Beer and Money. My name is Ryan Burklo, and on today's episode, we're going to be talking about health savings accounts. So there's a lot of, I think, information out there that can be confusing. It's a interesting and a really good account to have if you can qualify for it. So I wanted to get that information out there to you, especially it might be benefit season for you, or maybe you were thinking about changing careers or changing companies. This would be a good time to understand how this works. So real quick overview, right? So there are 4 key things that I think are interesting about a health savings account. One, it has a triple tax advantage that I'll get into here in a minute. 2, it is exempt from FICA tax, so federal income tax. 3, you're actually able to invest this money, which is commonly, I think, not known, or most people don't actually use it to invest the money. And number 4, you can take money out of this account at any time for qualified medical expenses. So those are 4 key things that I want to make sure you're getting out of today's episode. Let's start with qualifying though, right? So to qualify for an HSA account, you have to be at least 18 and you have to be enrolled into a high deductible health plan, right? If you don't have a high deductible health plan, you can't do an HSA. You can do a FSA, which is a flexible spending account, which is slightly different than the HSA. So if you're employed right now and you're a W-2 employee where you have a salary or a paycheck coming in the door from your employer, talk to your HR and see if you can contribute to an HSA account. If you're self-employed, this is a great thing to look at healthcare plans that are HSA eligible. So make sure you're taking advantage of that, especially after today's episode. It sounds like something that makes sense for you and your family. Look into that as well. So how much money can you contribute to an HSA? Okay, if you're an individual and you're not married with a family, you can contribute $4,300 a year into an HSA account. If you have a family and you're married, you can contribute $8,550 per year. And if you're age 55 or older, you can contribute an additional $1,000 on top of the numbers I just suggested, right? So for the family, that's $9,550 you can put into an HSA account, which is really quite nice. Now, keep in mind this HSA account, you can use it for today and pull it out for qualified medical expenses, or you can leave it in that account and touch it in retirement. So this is an account that goes with you. And so if you're age 65 and you're in retirement, this is money that you can use for medical expenses in retirement, which is different than the flexible spending account, the FSA. Those accounts you typically have to spend by end of year or you lose the money. That's a big misunderstanding between these accounts. So again, I'm talking into using this health savings account, right? So using it from the standpoint of you can just deposit money into the account and leave it in cash. You can take the money out and use it on qualified medical expenses. Or as I mentioned before, you can actually invest this money. And the stats out there, it's like 90% of Americans don't actually invest this money. And I think most of them do. They just don't realize that when they're setting up their HSA, they set up the contributions, but they don't actually tell the company where to put the money from an investable allocation. So I mentioned this triple tax advantage in the beginning of today's episode. So let's talk about triple tax advantage. So first things first, money that you get paid from your employer or from your company, you own a company, you don't have to pay taxes on the money that you're putting into the HSA account. So it's tax-free going in. The money can grow tax-free, and the money can come out tax-free if you use it on qualified medical expenses. So that's the triple effect here. Money going in tax-free, money growing tax-free, money coming out tax-free. Okay, this is a really big effect. Now, keep in mind, coming out tax-free has got to be a qualified medical expense. And I mentioned you can use this money later on in life. So if we're investing this money, and let me just pause real quick. If you're putting money into this account and you plan to use it this year, most likely it doesn't make sense for you to invest this money because the last thing you want is be counting on this money for medical expenses coming up and you invest it and the market's down, so you actually lost money. That wouldn't be the greatest use from a planning perspective. But if you plan to use this money, and I kind of speak into this with our clients, this could be the long-term care money that you have, or just medical expenses in general in retirement, which is a huge thing. The top question I get, or one of the top questions I get with retirees, is they're concerned about medical costs. Okay, they didn't have HSAs, right, when they first started. So imagine if you're 30 years old and you're retired, or 35 and you're retired at age 65, you can actually put quite a bit of money into this HSA account, invest it, and if you don't touch it for 30 years, that's a good amount of money that you can have sitting there, right? Depending on the market, right? 30 years, you can get up to $500,000, $1 million, depending on what the market does for you, right? It could be lower. Again, investing it for long periods of time, allowing that compounding to occur. And now when you're in retirement, now you've got this asset that you can use and pull out for medical expenses tax-free, right? It's a great way to use money, because I hate to be the bearer of bad news. Medical expenses will always be there. And maybe you don't have a lot right now. Maybe you won't have a lot in the future, but it is still going to be different expenses that come up. And having this money sitting on the sideline is going to be huge for you. So that's what I have for today, right? Again, kind of going back to the advantages of the HSA, the overview. You've got that triple tax advantage. It's exempt from federal income taxes, ability to invest this money, and the ability to take this money out tax-free if it's used on qualified medical expenses. I hope this episode was valuable for you. Make sure you head over to beerandmoney.net at the top of the page there. Make sure to check out our show notes. There'll be the link there as well. There's a contact us. If you have any questions on HSA or any other topic, that's a great way to reach out to us. If you are looking into getting organized, getting financially organized, and really looking at where you're at today, and are you making the right moves with your money, and how are you planning ahead? If you want to get a high-level scorecard of what you look like, there will also be a link in our show notes for you to go through, give some information, and it spits out a scorecard for you to kind of give you a basic glance of what you look like today. I hope this episode is valuable for you. As always, if you need anything, reach out to us. And cheers.
This podcast is for informational purposes only and is not to be construed as tax, legal, or investment advice. Although the information has been gathered from sources believed to be reliable, please note that individual situations can vary. Therefore, the information should be relied upon only when coordinated with individual professional advice. Guest speakers and their firms are not affiliated with or endorsed by Park Avenue Securities, Guardian, or Quantified Financial Partners, and opinions stated are their own. Guardian, its subsidiaries, agents, and employees do not provide tax, legal, or accounting advice. Consult your tax, legal, or accounting professional regarding your individual situation. All investments and investment strategies contain risk and may lose value. This material is intended for general public use. By providing this content, Park Avenue Securities, LLC is not undertaking to provide investment advice or a recommendation for any specific individual or situation, or to otherwise act in a fiduciary capacity. Please contact a financial representative for guidance and information that is specific to your individual situation. Ryan and Alex are registered representatives and financial advisors of Park Avenue Securities, LLC. OSJ 200 Market Street, Suite 1850, Portland, Oregon 97201. Phone number 503-221-1226. Securities products and advisory services offered through Park Avenue Securities, member FINRA, SIPC. Financial representatives of the Guardian Life Insurance Company of America, Guardian, New York, New York. Park Avenue Securities is a wholly owned subsidiary of Guardian. Quantified Financial Partners is not an affiliate or subsidiary of Park Avenue Securities or Guardian. Ryan Burklo, CA Insurance License Number 0K24924. Alexander Collins, CA Insurance License Number 0H24806.
7554181.1, expiration date January 2027.